Hello friends, James Stevenson here getting you psyched and amped up for Tesla earnings on Wednesday, April 19th. Tesla will release the earnings letter on their website, ir.tesla.com, after 4 p.m., after the markets close on Wednesday, so that's Eastern Time, U.S. For those of you who are in my international audience, let's check in with Loki. He was just up, dancing around and being active. You can still see his ears are up, but he is bedded back down again. Hard to get an action shot of Loki on lazy mornings sometimes. So without further ado, let's jump into what I am expecting for Tesla earnings. And the reason I'm not going to reveal these slowly as we go is because this is the same forecast that I tweeted on February the 19th of 2023. So you can go check out that forecast thread with 69 tweets, each with a visual, either a chart or a graph or a meme or tables of numbers that are from my detailed forecast model, which is what you're looking at right now. This is actually one of the summary pages meant to look as close as possible to the format Tesla will release. So about the third page in the investor letter normally looks like this. So what these numbers are the 2022 actuals by quarter. You ought to see these reflected just like this in the earnings letter. What we don't know yet is what's going to be in this column, which will not look like this. I have it formatted this way because I have the ability to drop in, whatever quarter I want from my little earnings model here and automatically update everything because I am a spreadsheet nerd. Here I'll just run down the list and talk about each one of these. So for automotive revenues, I'm expecting an increase in revenue. Now this is going to come as a surprise to some of the Tesla haters if it happens this way, because they think Tesla reduced prices by 20%. That's the narrative that I keep seeing tweeted out by the haters, the skeptics, the short sellers, and the Tesla trolls, saying Tesla has cut prices 20%. So if that were true, then only selling slightly more deliveries this quarter, you could expect the revenue number to only be 80% of this number. I have it increasing by a big percentage year over year. So prior year, Tesla automotive revenues were under 17 billion. I'm expecting 23 billion worth of automotive revenues. We'll see what number we get. It may not be this high. The first rule of forecasting is whatever you forecast, it will be wrong. So that number, I can just about guarantee you, is going to be a wrong number. The only question is by how much and in which direction. So of that, I've got 0.3 billion worth of regulatory credits, 292 million in Q1 2023 related to the sale of EV credits to other competitors who did not produce and sell enough electric vehicles to comply with applicable law. And that would leave automotive gross profit of 4.5 billion-ish. That number is down year over year by 18%. So kind of an interesting flip here. What's happening? Well, the prices have come down and the costs have gone up a little bit. So that's what the gross margin is doing here. Prices were pretty high a year ago this time, so expect for the average selling prices to be down some. The backlog was a lot longer about a year ago with a lot less production happening, so you get a lower number here for revenue that's going to go up by a lot, but the automotive gross margin is going to come down. I've got it coming down 1,274 basis points, which means by 12 points from 32.9 to 20.1, and that number includes the regulatory credits and the leasing. So what about total revenue if you include Tesla Energy Generation and Storage and Tesla Services and other divisions? I've got almost $27 billion worth of total revenue, with total gross profit for the whole company $5.1 billion. So that's kind of the range Tesla has been in for most of the past 4 quarters, between 5 and 6 billion worth of total gross profit. Q1 is not going to be a great quarter. Seasonally, Q1 is a pretty weak quarter. A year ago, it was a pretty good quarter because the pricing was still so high. Prices are a lot lower now than they were a year ago, so that's less profit flowing through to the bottom line, right? Then for total GAAP gross margin, I've got that down 10 points from 29.1 in the prior year to 19 flat is what I've got for total GAAP gross margin for all of Tesla's divisions, not just automotive. Then operating expenses, 1.9 billion. Income from operations is just this 5.1 minus that 1.9 leaves 3.2 worth of operating income at an operating margin of 12%. So 12% is not as good as it's been in prior quarters, but hopefully this number will continue to improve as the year goes on and Tesla ramps up production from especially Berlin and Austin, but also gets more production weeks out of Shanghai. That's one of the things keeping this auto gross margin down, is that Shanghai was shut down for a few weeks for holidays and then for line upgrades as well. So they only got about 9 weeks worth of production out in a 13-week quarter. Expect that to improve in future quarters. Then we've got adjusted EBITDA here, 4.9 billion almost, so about as much as the adjusted EBITDA Tesla reported in Q3 of last year, but less than they've reported sequentially or year over year. Those will both be down a little bit, making adjusted EBITDA margin of about 18%. Again, that's down some, but hey, Q1 isn't going to be the best quarter this year. Most years, Q1 isn't the best quarter for Tesla, so every year people freak out when the Q1 numbers come out and they're not as good sequentially, but they get better as the year goes on, right? Then we've got the earnings. So GAAP earnings first, $3.1 billion is what I'm expecting, with non-GAAP earnings of $3.5 billion, the difference between these two being my stock-based compensation estimate of, about $0.4 billion, so 400 million worth of stock-based compensation. What is that on a per-share basis? It's about 90 cents GAAP or about $1 of non-GAAP EPS. That's what's in my forecast. What do we have down here below the line? Automotive gross margin, 20.1%. If you exclude regulatory credits, 19.1%. Sometimes the regulatory credits throw things way off. Like a year ago, regulatory credits were 678 million. That's the highest they've ever been. So there was a big difference between these two numbers, about 3 points worth. I'm not expecting that to happen again this year, but we'll find out when the earnings get released. Then the energy generation and storage business, if there is a bright light in my forecast, it's that a year ago, energy generation and storage was losing money. Now that the Lathrop facility is ramping up and shipping out a lot of megapacks and selling those for about $2 million each at a pretty healthy gross margin, that ought to help the energy division be more profitable this year than we've ever seen them. Then services and other, I've got a 4% profit margin. That's in line with what we've seen recently. So that is investor letter page 3. Then after the photos in the deck, if you skip down about 20 more pages, you'll get to this other view that breaks out the revenue by line. So just to give you what those are, here's the breakdown of automotive sales versus leasing. Again, I did not update these numbers after Tesla's production and deliveries report came out because my forecast was within 1% on both of those. I was low by about 0.8% on deliveries, and I was low by about 0.15% on production. So I figured I was close enough on those to not bother reforecasting with the new numbers in here. Now, the automotive sales number may be a little aggressive here because fewer S and X were sold than I thought, but more 3 and Y were sold. So, of course, S and X are going to come at a higher revenue per vehicle, so this number might be high by a little. We'll find out. Then we've got energy generation and storage here, 1.8. Almost $2 billion worth of services and other is what I expect as the fleet gets bigger every year and more people buy Tesla insurance, etc. Used car resale is in here, that sort of thing. Cost of revenues, here's those breakdowns. These numbers are going to get bigger as the revenues get bigger, right? Even if the cost of sales percent stays the same, growth in revenue means growth in cost of sales. Leading to that gross profit number we just saw. Here's the breakdown for research and development separately from the others. So a little down year over year, but a little more than we've seen in the previous 3 quarters for research and development. Then for SG&A, I've got that number higher than we've seen in any of the previous 4 quarters by a little bit as Tesla expands their global operations, hires more people. Then restructuring and other, I'm forecasting 0. 0 is a good forecast for this one. I might not be wrong on that one. I might be able to defy the first rule of forecasting on restructuring and other if Tesla actually reports 0, as they do sometimes. And interest income ought to be higher than we've seen it before because Tesla invested in some securities that pay interest. We found out last quarter, so they might even beat that 181 million. Interest expense ought to be lower than we've seen it in the past because Tesla has been paying down their long-term debt, so they have less debt payments to make and therefore less interest expense. Other expense income net, it's totally a crapshoot every time, so I've got 33 million in here. Prior year was 56 million. Sometimes it's negative. We'll see what happens here. Then we've got income before income taxes, so EBIT. Then the provision for income taxes here, about 300 million, bringing the net income down to 3.1, as we saw on the previous page. And that is how a bill becomes a law. So, I haven't updated this stock-based compensation number yet, but I need to do that. So there you go. That's my quick tour of what I expect Tesla to report on earnings day. Right, Loki? Oh, the ears don't even perk up. He doesn't care what I'm talking about. That's my video. If you've enjoyed my video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel over here? You can click the notification bell to be alerted whenever I post fresh content. Thank you to everyone who supports my efforts, if that's through Patreon or by joining my YouTube channel or by subscribing to my Twitter account. I appreciate you, especially my executive producers, Kathy Kitchler and Rebellionaire.com. And I'll see you in the next one.